Okay, folks. Unbelievable. Only when I go live. Only when I go live. Okay, I'm having a spam attack of block-ups, pop-ups. All right, let's talk about the markets. Let's talk about Amazon. Let's talk about who else reported tonight. I am completely unprepared, but I think that makes it fun. When you have a guy that just presses go live, has no idea what he's going to talk about, except for Amazon's earnings, as well as the weekly charts and how they may close out. I'm pulling up some graphs that I normally pull up before going live, but I got held up today, and they're good topics to talk about. But what I'm looking for primarily is a list of the companies that reported today. Now we know that we had the Google that reported yesterday. That was no bueno. And the market shrugged it off today. That's next week. Let's retweet this. There we go. This is what I'm looking for. Bobby boy. Okay. So let's take a look at the names that reported this week. And we'll take a look as well at market cap weighting. We will talk about the Federal Reserve's balance sheet, valuations, which are ridiculous, and evidence that we are near the end of this bull run. So let's get to it. Let's first say hello to folks if they're not already gone, because I'm not prepared. Wow, we have a lot of people on tonight. Awesome. 56 people see me unprepared. Corey! Hey, Corey. Welcome. Mr. Sean, welcome to you. One of my favorite names on the interweb is Polish Taco. Can't make that up. Love it. I love Polish people. I love tacos. Perfect. Mr. Tim, thank you for the sound check. Appreciate that. George, welcome. Always good to have some non-estrogen here. Excuse me, non-testosterone, I should say. Good to have some estrogen. Chill everybody out. Mr. Pete, welcome. All right. So let's talk about and what this is going to mean for the rest of the market. Now, what I don't want to come on here being all doom and gloom. I don't want to do it. Alphabet reported yesterday their price action. Oh, by the way, I'm sorry. I got to come back to this. We're going to be doing chart requests in a moment. So I forgot to post this. Again, I was late. If you are not in our forum already, it's free. It'll take you about 3 seconds to enroll. Sign up. No credit card required. Head on over. Make a couple of emojis, make it cute. There we go. There we go. And we post. Now I see Jody was already proactive. Jody, you're covered. I added you already. Okay. So let's get to it. Let's talk about Apple's earnings. Now, I already took a look briefly at what they announced, and it's not about last quarter. Forget about last quarter. It's all about guidance. So let's first go to the numbers that everybody typically looks at. Remember, the stock market's a forward-looking mechanism. Okay. So forget about last quarter. It's all about next quarter. Amazon, GAAP EPS 186, $1.86 beats by $1.48. I really don't care about EPS. I care about sales. Sales 187 billion, 800 million, and they beat by a couple of hundred million. Does that make up for the spread in EPS? I'm not an accountant, but I don't know. It seems a bit much to drop to the bottom line. So I think that this is not commensurate with this beat. This beat is not commensurate with the sales beat. And I think the street's picking that up. So maybe a one-time event drove EPS, one-time event drove sales. I doubt that. Sales are much more difficult to manipulate than EPS. Now, here it is. Q1 guidance disappoints investors. In the end, it really only matters what their guidance is. Do they give numbers? I'm looking for guidance numbers. Sees revenues 151 billion to 155 billion versus estimates. Oh, that's a big disappointment. That's why you're seeing the shares drop right now. The consensus view by the street was that they would see Q1 revenues of 158 billion 485 million. They gave a low end of 151 billion and a high end of only 155 billion spot 5. So their high end is consensus on the street. That's not good. So that's why you're seeing the price action that you are in the after hours session. So the anticipated market maker move on Amazon was about $14. We closed at 238 spot 38. So for those that are bullish on Amazon, you're within the anticipated market maker move. Okay, so take a deep breath. The street it may look like an ugly chart. It's not. It's within the expectations of the street. In fact, it's not as bad as it could have been. It could have been up $14, down $14. We're down about $10. Okay, so let not your heart be troubled all too much. Now, this stock will be trading overnight. The Asian markets will open up. The hot and heavy money will start coming in around 2 a.m. And then we'll see whether or not we get a continuation sell-off when the institutions are able to trade at 2 a.m. We, the plebs, can only trade at 7 a.m. Eastern Standard Time. So you're going to see two other events take place. We're going to close out the 8 p.m. session here, Eastern Standard Time, and we're probably going to close right at about where we're at current. Then you're going to get the 4 a.m. session that opens up, and in all probability, my guess is that you're going to get more disappointment to the downside. If I had to put my nickel down and say which way we're going to go, probably going to move lower. Then you get the 7 a.m. session that opens up. Excuse me. Yeah, the 7 a.m. where the pre-market trade happens, and of course, the 9:30 Eastern Standard Time when all the retail investors can move in, and that's when the big money begins to position themselves in Amazon. Either they're going to flush out the longs and take it up higher, or they're going to sell and not want to have anything to do with the stock. So that's going to be the next 24 hours. And you probably saw something similar with Google last night, where, yeah, you got the sell-off. Then at around 4 o'clock, we opened up, traded sideways with a bias to the downside. 7 a.m. around that area. Remember, this is Central Time on Thinkorswim. It sold off. So that's probably what's going to happen here on Amazon. Great company. If you're a long-term investor, let not your heart be troubled. Now, what else reported today that we may want to take a look at? Net reported. It's not going to move the market in any direction, but it's a hot sector. Great company. Oh, yeah, wow. They're moving up. But again, it's not going to move the market. It's just not that big. It's not a marquee name. What else? MCHP. No bueno. What happened here? All right, so it looks like they missed. Microchip Technologies shares are trading after the company reported worse than expected Q3 financial results and issued Q4 adjusted EPS guidance below estimates. So they missed on expectations, and their guidance is poor. They see Q4 adjusted at a nickel to 15 cents. Wow, that's a huge miss versus a 28-cent estimate. Revenues of 920 million to 1 billion versus, wow, they guided below the consensus estimate on a forward-looking basis. So MCHP is, unless it's sold off hard of late, it's not going to have a good day tomorrow. It's been beaten up. I guess a lot of people saw this one coming. So it's in situations like this where you want to take a look at the historical valuation of the stock, meaning how is it priced on a price to book basis? How is it priced on a price to sales, forward looking, rear view mirror looking? And if it's at or below a reasonable valuation, the damage that you may be seeing now is damage that is already factored in. So I use this one service. We're going to bring up MCHP. I don't have a big agenda tonight, so we'll spend a few minutes talking about where these stocks are on a valuation basis historically. Let's get rid of this. And we'll talk about Amazon as well. I know a lot of people hear about Amazon. We'll go back to Amazon in a moment. Hey, folks, if I could ask you to like, subscribe, you know the deal. Helps me out with the YouTube algorithm. All right, so MCHP, this is not going to reflect today's price action, but we'll know going into the earnings call, was it expensive? Was it reasonably priced? We could tell the financials. Revenues have been declining for quite some time. Margins, which is the Pimp Mac Daddy metric of technology, they've been guiding lower. and net income has just been taking a nosedive. That's not going to change anytime soon. Growth, there is no growth. Price to earnings. Went into earnings with a 36 handle. Price to book is cheap on a historical basis. Price to sales is not cheap. So this stock here is a no-go. We'll watch it to see whether or not it does sell off further tomorrow. Right now, you go into these stocks with the attitude of this stock has every reason to go lower. But what if they trade it down and then they close it up on the week, especially? That's a bullish reversal bar. That's a tell that the market may be saying, okay, we already knew this. This was a kitchen sink quarter, and perhaps now it's time to take the stock up. I would not make that determination until you see how we close out the week. Not trade intraday, not trade intra-week, but I would take a look at the weekly chart and say, okay, do we close up after this horrible data, whether it be this week or next week, up on volume? If no, avoid. It's going lower. Look for high quality stocks. Let's take a look at Amazon. Remember, the data that we're going to be looking at does not reflect the new data. But we know Amazon's a great company. Revenue moving higher. And they beat. So this number here is only going to get better tomorrow when this updates. Net income rising. Good stuff. I'm sorry, net margins. Net margins rising. My apologies. And for a retailer, rising. Good stuff. Well managed. Usually retailers work on thin margins, but they have the AWS business. They have a lot of other businesses. Now, it's not cheap. You're paying a lot for the shares to behave very, very well. And their guidance is not wonderful. So I would not be a buyer tomorrow morning on the dip. Price to earnings. You saw this spike up in 2022, but if you X this out, just pay no attention to it. We're fairly valued going into this earnings report on a historical basis. Price to book, you could argue, is at the higher end of a range going back to 2022. Price to sales is very expensive. We're at the highs that we've been since the month of June 2021. So, do we see value here? Do we see an opportunity to buy the dip? Is the street overreacting? Probably not. Probably not. So I would be careful here with both of these stocks, MCHP and Amazon. I would not be buying the dip. I would do exactly as I mentioned before, not to repeat myself, but watch. Do we flash a bullish reversal bar and close up on the week, this week or next? That would be a potential tell. You want to see the stock first stop going down before you get big to the long side. Right now, we're way too early to have that conversation, or you should buy these stocks. We have validated that they're not cheap. So there's a very good chance to take it on the chin tomorrow. TZ Burton, Bob, I love the TrendSpider Congressional Insider Trading. We'll go over that in a while. I'm glad you enjoyed it. Folks, we're a partner of TrendSpider. They give a discount below, a minimum 35%, probably more. Just use the link below on YouTube, link above on Twitter. I'll be showing how to use it later on when we go over chart requests, and we'll go over the Congressional Insider Trading Dashboard. I'm glad to hear that. Thanks for the feedback. Appreciate that. Lilly reported after the bell or before. Usually the farmer names report before the bell, but I don't know that as fact. Let's confirm that first. Yeah, they reported before the bell. What did they do? Okay, it's not bad price action. It rallied nicely, closed up on the day 3 1/3%. We pulled back off the highs. Looks like a bullish number. Good looking chart. It's probably going higher tomorrow. You're probably going to see these names, the defensive names, the staples names, healthcare, etc. If you're going to see any equity flows tomorrow to the plus side, meaning money flow into names, it's probably going to be names like Lilly, Staples, Altria, names like that. Let's take a look before we go to the rest of the topics tonight. How are the futures behaving in light of the Amazon news? And let's bring up the NQ 15-minute view. Yeah, I got to tell you, it's taking it very, very well. I mean, you're not seeing a lot of volatility here at all. So right now, the street's playing it cool. They're treating it as if the Amazon numbers are a nothing burger. Maybe they're right. Let's go over to Google. You know, they closed at 191.60. They're down fractionally. Let's take a look at the E-minis. Nothing going on here at all. Down fractionally. YM. This is the Dow Jones futures. Down fractionally. So not much activity here on this news. Let's check in with the precious metal names. Gold, which took a pause today, rallied. We're going to go over the weekly chart in a moment. Silver, bouncing back here. That had a rough day today, but that came well off the lows. This is the type of price action I really, really like. They knocked it for a loop in the morning, and then bam, they took it up higher. So we're going to go to, again, a weekly chart in a moment. And I think that's all we need to go over right now. Let's just take a look at yields. Yields down fractionally, certainly not bearish. And lastly, the dollar. Not a lot of activity on the news out of Amazon. Microchip technology really doesn't matter at all. It's a small cap. So let's get to it. Let's talk about some interesting data. First, let's talk about the recap of economic data. I think one of the reasons why the street's not reacting right now is because you have non-farm payrolls coming out tomorrow. That is the pimp Mac Daddy of all economic reports. Let's take a look at the Monday data. S&P final U.S. manufacturing PMI, 51.2. That's expansion. That's actually a good read. Any read above 50 is a sign of expansion in manufacturing. That's the second consecutive month of expansion in manufacturing. Construction spending beat. ISM manufacturing, again, actually, this is not again. They were expecting 50. That would be the first time we've been above 50 or at 50 in quite a while. And we came in at 50.9. Prior read was contraction at 49.2. Job openings declined, missed by 400,000, bearish. Factory orders declined, one tick below expectations, bearish. ADP beat. Funny part is that bonds on the week are still up. They did close down today fractionally, but they closed well. We'll come back to these in a moment. So no real reaction by the bond market to a very, very hot ADP employment number. You would expect that yields would have gone up, which they did. and bonds would go down, which they did, but they did it fractionally. Now, really, it's not commensurate with the big beat here on ADP, the move in the bond market. ISM services, that missed. And it's still in expansion territory, but it missed expectations by 1.2%. Initial jobless claims rose today. Productivity missed, bearish. Okay, so tomorrow we know U.S. unemployment. Keep an eye on this number here. For those that are hoping for rate cuts, you can't see rising wages. As sick and perverse as that is, I want the next guy to make more money. American true blue. I want people to make money. Federal Reserve doesn't see it that way. They view that as being inflationary. See, the problem with the Federal Reserve is that they don't know what causes inflation. They don't know that it's them financing the debt that the government sends out, buys, and spends on USA aid and whatever other shenanigans that they're doing. They blame you, the consumer. You make too much money. That's the problem. And they want to keep the wages down. So the Federal Reserve just doesn't appreciate what causes inflation. They need to watch some videos on Milton Friedman. Normally, if I was prepared this evening, I would have had a video ready to go off right now of the great Milton Friedman, rest in peace, and his opinion on government and how they create debt. Let's talk about, as we do every time we go live, the valuation of the market. Now, we are well through the midpoint of earnings. And we are, unlike last week, we were above the October 2021 highs of the Shiller PE ratio at 38.58. And for the past several times that we have seen a Thursday night where we have traded above on a Thursday evening, closed out the day above a PE of 38.58, by Friday, we correct. So my guess is that we're going to stay down below 38.58. And here is a prediction that if they, after the earnings reports out of Google, out of Amazon, out of the threats out of China on Apple to begin reviewing their app store, whatever they call it, Apple, whatever it is, that if we close to a new multi-year high above 38.58, they're probably going to make a go at the March 2000 highs on, can't get it, on the S&P 500. I think that is entirely possible. The key is to get yields down. And that's what President Trump is trying to do right now. Frankly, I voted for him. I don't think it's going to be a good thing that we get lower yields. It's only going to stoke inflation, unless, of course, they cut government. And the Federal Reserve is clearly not helping the president achieve lower 10-year yields because they continue to roll off debt off of their balance sheet. So the buyer of last resort for our debt is the 10-year yield. Yields are higher now than when they were back in September when they began to cut rates. Why? It's because the bond market said, no way. No way are we going to lend money to you 10 years, 20 years, 30 years out at these rates. You're insane. So what do they need to do? They need the Federal Reserve to come in and be the buyer of last resort of our debt. If they won't cut rates, the only way to get rates down is for the Federal Reserve to monetize the debt. That's it. End of statement. And they haven't done it yet. We'll be watching. All right, so this is always a tell. And I've been hearing about this for a couple of weeks now, about the level of retail buying. I just haven't had a chart. So retail is buying near record levels. On Monday, retail traders purchased $3 billion of equities after the drop, the largest purchase since 2015. Wow. Last week, retail traders bought $8 billion of equities amid deep-seek worries. Has retail ever been this bullish? I'll tell you, looking at the bullish percent index, it's not reading that. It contradicts this chart, to be honest with you. The bullish percent index is in a happy place. It's not overbought. It's not oversold. So, what this post is implying is that once you get retail that steps into the marketplace and begins buying in earnest, usually it's a top. And historically, they're right. And when you take a look at what the smart money is doing, the Warren Buffetts of the world, they're cashed up. Warren Buffett has the largest cash hoard in history of his fund. That's for a reason. He doesn't see opportunity out there. So he's going to bide his time, and I respect the heck out of it. The guy's 90 years old, and he's still patient. God bless him. So huge inflows by retail. That is a major, major tell that this market is close to if not, we've already seen a high. But I'll be honest with you, I was trading back in 2000, 1999, 2000. There were a lot of retail traders for several years in there buying hand over fist. So this is not in and of itself telling me to go out and short the market. Well, we are short, but it's not telling me screaming, go short the market. Do not do that. That's a fool's errand. This is just a piece of a puzzle. If I saw this and I saw the put call ratio was through the floor, if I saw this and the put call ratio combined with bullish percent index, way too much bullishness out there, then I'd be saying, okay, maybe we have a case here. Right now, this is one piece of a larger puzzle. Just keep it in the back of your mind. I wouldn't go shorting based upon this. So I've spoken about this in the past, and earlier I mentioned that the Federal Reserve is going to need to monetize the debt, meaning if Wall Street doesn't want to buy the debt, if sovereign wealth funds don't want to buy the debt, if governments don't want to buy the debt, the Federal Reserve will come in and buy longer duration debt. Remember, the Federal Reserve can cut short-term rates. They cannot cut long-term rates. To manipulate those rates, they have to buy the debt if the markets don't respond to the short-term rate cuts. So that being said, when we go out and we take a look at history, in fact, we now have to go max on this. Here was the financial crisis. So the Fed's balance sheet was around $800 billion. After the financial crisis, we hit a peak of $4.5 trillion. Then we leveled off a bit. Then COVID hits. We went from $4.5 trillion. We more than doubled the balance sheet. The reason why they had to double the balance sheet is because to get the same effect as going from 800 billion or nearly 900 billion up to 4.5 trillion, you got to buy more because you have the law of diminishing returns. So if they want to get the stock market and the economy churning again, GDP 4%, you're going to have to take the Fed's balance sheet not up to $9 trillion. Forget that. That's just a starting point. You're going to have to go up to $20 trillion on the Federal Reserve's balance sheet to get the same bang for your buck as you did back here, up to here, or from here up to here. That's a fact. And what this chart is telling you is that basically what I'm telling you, in 2024, to generate 1 unit of GDP growth, it took $3.8 trillion of national debt. In Q4 alone, it took $5.8 trillion of debt to create $1 of $5.8 of debt to create $1 of economic growth. If not for the huge debt, the U.S. economy would have been in a recession. This was Treasury spending a lot of money, issuing new Treasury bonds. And then what did you see? So yields move up higher, right? Because the Federal Reserve wasn't monetizing this debt. They were rolling off debt off of their balance sheet, which they should have been doing here. Now, they need to come back. And that's what you're going to see next. Just a matter of time. The problem is that the Federal Reserve has a problem. And that problem is that they've claimed victory. They fixed inflation. They said they fixed inflation when they increased interest rates back in September by 100 basis points since. Multiple rate hikes. Now they paused. So for them to go back in right now and start buying up debt or to cut rates, they got to admit they got something wrong. Well, if they cut rates, they're not going to do that. They're going to buy the debt because nobody's really watching. Jokers like me are out there watching, saying, listen, watch out for the Federal Reserve's balance sheet. Most people aren't watching. If they cut rates, that'll be a tell that they kowtow to the Trump administration. They don't want to be perceived that way. And they can't blame the Trump administration for having to cut rates or anything, because then they will lose their independence. So they need to create a problem. They need to be the hero on the white horse, the white knight on the knight on the white horse, and they need to ride in and say, here we are. Don't worry about it. We're here to fix, yes, the problem we created, but we're here to fix the problem. And then again, down the road sometime, they'll claim victory. Powell will be gone. His predecessor or successor will claim victory. And so begins the next cycle. So they're going to have to print a lot of money. You're looking at $20 trillion worth of debt minimum. And here is a problem for the equity markets. So the top 10% largest whole U.S. stocks account for a record 75% of the stock market. So what's happening right now? Let's bring up daily chart. U.S. Steel broke out. I was going to buy call spread on it the other day. We mentioned this over the weekend, the plays that we thought that would rally on the tariff news. And one was U.S. Steel, and man, it broke out up to 39.53. Okay, I digress. Alphabet. Let's go to a weekly chart. Bearish engulfing bar, down 4.5% on the week. Amazon, I can't get the show on a weekly chart, but we can certainly get to see it. Franklin, welcome. We can get to see it, I believe, on a daily chart. So there's our price action on Amazon. Tesla, down today, broke support, down 1.8%. I look at Tesla. This is a weekly chart, folks. You have Tesla. We closed down below 375.19. That means that we have closed out the week below the week of December the 30th. So what does this tell you? What this tells you is that you have a double top and you had a confirmation breakdown below 375. So you have Amazon under pressure. You have Alphabet under pressure. Tesla under pressure. Meta, which we are short, is up on the week. I know that for a fact. But when you take a look at the daily chart, take note of these topping tails. Now, this stock is either going to explode up or it's going to break support. My guess is that we break support. I hope, because I'm short. So Meta coming under some selling pressure as measured by these candlesticks. Apple. What's going on here? Let's go to the weekly view. What's going on here? Lower highs. Do we break the new lower lows? Microsoft. We just covered shorts today, not yet today, yesterday, on Microsoft. Microsoft hasn't put in a new high since July of 2024. I'm sorry, folks. The leadership groups of the triple Q names are putting in rounding tops. Microsoft, for example, if we break down below, I mean, even if we close down below 403.81, it probably means we're going to take out the lows of August. And once Microsoft goes, Apple goes, the rest of the triple Q names go, and the rest of the chips come tumbling down. Artrain, please put any requests in the forum area, please. I put a link if you're not currently subscribed, okay? I won't be able to track it. I won't be able to remember. Please. Okay, what else do we have here? Let's go to the weekly charts. Let's talk about how we're setting up for the close of the week. Let's see if the Fed Watch tool has changed at all on the Amazon news. I doubt it. No, they're not anticipating a rate cut till at best July. At best. So I was talking about this earlier, the bullish percent index, when I was talking about retail money moving into the stock market. You know, were this up here or even up here, I'd say, you know what? We have some concerns here. You have a lot of bullishness in the market. You have retail investors that are buying a lot. This is not concerning to me at all. So the retail buying, yeah, it's a concern, but it's not a huge concern yet. CRB commodity index weekly chart. This is more of a concern to me than anything else because people are hoping for lower yields. How are you going to get lower yields if you have the CRB commodity index, which is threatening to break out? That's inflation. In one picture, that's inflation. The yield curve down on the week, that's a plus for the markets. Bond prices, of which we are long, but still my worst second worst performing position now after PI impinge. Up 2.75% on the week. Let's go to the daily chart, see how we closed out. Doji star formation, a sign of indecision. I think we press up higher here. Maybe we get a day or two of a pullback. But I think that if equities weaken up tomorrow, you're going to see money rotate into the bond market. That's going to send yields lower. And, of course, TLT higher. Yields on the week down 2.82%. They were higher. They are now lower, looking bearish. Good stuff. Treasury inflation protected securities. Folks, this is a chart that's telling you institutional money is still very, very concerned about inflation. Look at silver. Look at gold. Look at the tips. Treasury inflation protected securities. Retail doesn't buy tips. Big money buys tips. And they're buying them. I mean, good volume. They tried to take them down today. What do? Bid them back up. There's money flow going in them. The dollar, bearish reversal day. Rolling over. What do you want to own? Silver, gold, mining stocks, but more so silver and gold than the mining stocks. We are very positioned long of gold and silver right now. The dollar relative to the euro. Eurozone cut rates last week. The euro's up. Dollar's down. I think what they're anticipating is that the Federal Reserve is going to come in and they're going to start monetizing the debt. That's going to kill the dollar. Yen, very strong week here. This threatens the yen carry trade. A rallying yen is bearish for U.S. equities. Have no doubt about it. It impacts the yen carry trade. I won't go into it. Look it up. The last thing Wall Street wants to see are disappointing earnings and the yen rallying up higher. I skipped something here. Volatility. Talent. The man, the mission. How are you, sir? Where's my vol? Here. Volatility. Excuse me. Yeah, volatility. Down. That may change tomorrow. Dow Jones Industrial Average. Oh, my charts are messed up here. Yeah, let's go to the weekly view. Good looking chart. Consolidating around 44,000. We tested all-time highs. We backed off a little bit. We could easily explode higher here. So what other option may be here that the markets may see is if there's a belief that the Trump administration, which appears to be doing the right thing thus so far, is going to be really focusing in on GDP growth, then the names that you want to take a look at are your manufacturing names, your big Dow Jones names, mining stocks, whether it be copper mine, whatever. You want to take a look at those names, materials names, look at the XLB. If those names are moving up higher, that's in anticipation of economic growth. And you take a look at the weekly chart of XLB. This is the materials select. This is iron ore. This is copper, etc. And we're putting in higher lows. So this is actually a pretty bullish bet. So I wouldn't be the least bit surprised that we don't get a broad-based market sell-off, especially with the yield curve pulling back. We get money flow out of the triple Q names, of which we are short for disclosure. And we get money flows into the Dow Jones names, and we are very heavily invested into Boeing. That's getting ready to break out. So that's certainly a possibility. And the other area that we're going to want to keep an eye on is if yields pull back, then the small caps and the mid caps can rally. Historically, small caps rally 6 months or tend to outperform the market 6 months after the first Federal Reserve rate cut. So that was back in September, October, November, December, January, February, month number 6. Keep an eye on the small caps. We're going to go to a chart in a moment. Dow Transports down on the week, but off the lows. I think today's price action was not great. It was not great. So my concern here, yeah, we closed up. All up days are not made equal. And the same holds true for down days. The market sends you signals. It tells you a story. So we closed up. Would you buy this? I wouldn't, because I think that this is setting up as a bear flag setup. We're probably going to break the support level. We could put in a higher low and then move up higher. I wouldn't short it, but it's a concern. Dow Jones Industrial Average. We already did this. Why are we talking about it again? S&P 500. I got to tell you, this looks like it wants to rip. It wants to break out to new all-time highs. Bullish. It's expensive as heck. There's no volume. Let's go to the daily chart. There's no volume. We broke out today. How is volume? Volume, to be fair, rose relative to the prior 2 days, but net volume is no bueno. Is this rally broad-based? This is the equal weight. Aha. So perfect example of why this market is like a two-legged stool. Here is your cap-weighted S&P 500, meaning you have Microsoft, a few names that make up the grand proportion of the S&P 500. Now, Microsoft is not behaving well, but other names are. And on the week, look at this weekly candlestick. We're up 0.75 of a percentage point on the week. Look at that candlestick. We were lower. We're at the highs of the week. Good stuff. But then when you take a look at the broader base S&P 500, we are down on the week. It's only because you have a couple of stocks driving the S&P 500 up. That's unsustainable. You always see that at market tops. And this time, this is like one big magnifying glass of ridiculousness. Let's take a look at the Qs. Again, another market cap weighted ETF, widely looked at, but we're not satisfied with just looking at the market cap view. Bullish reversal bar up 1.4%. Man, this thing looks like it wants to take out off, but there's one problem. There's no volume. There's no volume. There's no institutional accumulation here. That does not mean it can't break out. It can, but that it's on very, very thin ice, that rally without volume. Daily chart. Great setup here. Beautiful. Higher lows on RSI, higher lows on stochastics. Continuation breakout. Heck, it even passed the 3-day rule. What's the 3-day rule? You break out, that's day one. Day two, the retest, you close above support here in black, in green and red. We did that. Then you get your follow through. It just passed the 3-day rule. Bravo. How's volume? Non-existent. Non-existent. That's the retail money propping up the market. Now let's look at the QQEW. Fairly consistent with the QQQ. Let's go back to the weekly chart, up 1.4. So the broader base basket is outperforming the equal weighted basket. No volume though. Let's go to the daily chart. It looks like it wants to go up. Small caps. Weekly chart. We are at resistance. We hit it this week. Volume very thin. It's month 6, so let's take a moment. Let's take a look at the daily view. Is this something that we want to own? We already own it. I mean, get big. No, not yet. That may change a day or so from now, a week or so. We're not overly bearish of the small caps, just not overly bullish. The banks. This is a daily chart. Let's go to a weekly view. Really good looking chart here on the banks. President Trump is going to take a lot of regulation off the banks. They're going to do very well. Technology doing well on the week, up 1.74%. We'll see how we close out the week. Do we break out or break down? Right now, the semis they closed out the day today above resistance, and it's been a long while. The last time we got above resistance was back here. The week of January the 13th, we had follow through, then we crashed. Now we're back above it. One trading day left to go. We'll see how we close. Software, looking good. Biotechs, nothing happening. Staples, not attractive. Let's talk about emerging markets. Dollar week, emerging markets breaking out. We own this. I am tempted to go adding more soon, especially if the dollar continues lower. Emerging markets with China, very strong, behaving well. Let's check out names like Baba, Not great. Still trade tensions there. We'll keep an eye on it though. Energy. Energy did great yesterday. Gave a lot of it back today. Oil. I put on a long position today on oil. Very tight call spread. We're probably going to test $70 a barrel on oil. So the way I'm looking at oil is this way. It's in a very tight descending wedge formation. Doesn't mean it can't move lower. It can. But I think that you're going to get a ruthless reversal and a rally in oil. Because with the dollar going down, oil benefits in terms of price because it's priced in US dollars. Therefore, it goes up in value. Gasoline. Look at this move up on the week in gasoline. Holy cow. Holy cow. This is the biggest move I've seen on gasoline in quite a while. Gasoline prices have surged 11.5% on the week. That's huge. That hits everybody. Let's take a look at precious metals. Let's take a look at the gold and silver index monthly view. See where we're at, folks? We are right at a major resistance level. This is combined gold and silver index traded on the Philadelphia Stock Exchange. And we're getting ready for an explosive breakout here on silver and gold. All the stars are in alignment. Here's the weekly view. Look at this. 1, 2, 3, 4, 5, 6 consecutive weeks to the upside. Let's check out gold. We're a little bit frothy here on gold relative to the third standard deviation Bollinger Band in red. It's probably going to pause in the next week or so. So I'll be looking to sell some calls on our gold position. Now, I've been reluctant to sell calls because I think we're going to touch 3,000. And that's a big psychological level. If we do hit that 3,000 mark, I'll sell deep out of the money calls on gold, probably going out to April, I think we have on the put side. And we are short the puts, which is a bullish bet. We don't own the puts. We're betting the stock is going to go up. Let's see how we close on the day. Yeah, under a little bit of pressure. Let's check in with silver. Looking good. For those of you folks that remember Freddie Prinze from back in the 70s, not that I'm that old, looking good. That wasn't Sanford and Son. What was the name of that show with Freddie Prinze? Great actor. Early death. Silver is just looking a monster here. You got to be an owner of silver. Relative to gold, it's underpriced. So we own it. We have a call spread. We're short the puts. Bullish on it. I think it's going up higher. All right, let's do some chart requests. And again, folks, we're going to be using our friends over at TrendSpider. What was mentioned earlier about TrendSpider was TZ Burton. Under what's happening now, You get the government cells, and you can see exactly what they're doing inside Congress. And you also get a whole bunch of stuff, but you get this as well, the Pelosi tracker. And she bought Amazon on the 17th of January. So all of this is included. I believe in this product so much. I give it away free to our silver and gold level members. So there's a lot of functionality here, folks. I call this the Bloomberg terminal for the poor retail trader, of which I am one. So if you're not currently using it, you're missing an arrow in your quiver. Believe me, your competitors are using it. We sell a lot of subscriptions, and people don't cancel. They don't cancel. They stick with it. So they're sticking with it for a reason. Take advantage of it. A minimum of 35% discount code. Use my link below or the link above on Twitter. And let's get to our chart request. Let's see how many we got. Baba, that's a good one. Bonnie Bean, welcome. EXK, I haven't heard of that one. Franklin, NGS. Is that natural gas services? I'm trying to test my memory. We have a few more. The Google, that's for the lovely Jody. Sean, he loves his rum. Let's refresh, make sure I didn't miss anybody. Look at Donnie. Donnie the monster tonight. All right, we got L. Is that the London Stock Exchange? Oh, long. I know what you're doing. I see the S next. Okay, I got you. So the SVXY looks like a volatility product. There's a lot of them out there. We own SQQQ for disclosure purposes. All right, let's get to it. All right, we're shutting it down. We are closed for the evening, and all right, Baba, we just spoke about, but it's worthy of a conversation because the Chinese are pumping in a lot of liquidity into their economy. Now, nobody wants a trade war. I think I've said this in the past, and I'm going to say it again because it just makes sense. President Trump does not want to put a lot of tariffs on China. What he wants them to do is to buy our debt. That way we could buy their junk. And that old relationship that we had resumes again. It's good for them short term, longer term, not so good. It's good for us short term, longer term. We've been doing pretty good that way by selling our debt. That's our number one export, bonds. So we can always file bankruptcy. They're never getting their money back. So Alibaba, let's clear this off. I want to know if we get a I just removed it. I want to know if we get a retest of support. And me, I would be a buyer. But I would not buy the common stock. I would buy a call spread because I don't want a massive loss. I want to know exactly my max loss up front. Owning the common, way too much money at risk. They're our enemy. Can't ignore that. They are our enemy. Look what they did to Russia after they invaded Ukraine. Any Russian stock traded in the United States was wiped out. Okay, so there you have it. Weekly chart. I'm not a buyer here. You're like Nemo. You're swimming in the middle of the ocean. You should be by the reef. There's your reef. You want to wait for protection. Right down here where you have buyers of like mind to step in and help defend the stock. We've been doing nothing but trading sideways. So I'm not a buyer here. Again, down here, any market shakeout, I'd be a buyer of Alibaba at around 95 bucks a share. Let's see if we have any no support levels to speak of other than the one I identified. NGS. Hey, I was right. Natural Gas Services. I still got it. It's not all gone, Franklin. Thank you. Every once in a while, I worry. That's it. Chico and the Man. Thank you, Vincent. That was a great show. Chico and the Man. Great show. Thank you for that. Okay. Weekly view. Okay, so these are the automated trend lines. We have resistance above. Again, we have another Nemo situation. I love natural gas and anything related to it. 23.73 is support. If you're looking to buy it, that's the price point I'd be looking at. That's the funniest thing I've heard. But I got to read this. I need to make sure. Thank you, Tim. I need to make sure I'm reading this properly. Thank you, Bob, for not preparing tonight to show. Awesome. I love that. Thank you for making me laugh. Okay. So natural gas services, I'll be waiting for 23.73. The only thing I'll point out here, Franklin, is this. Watch for your weekly Stokes. They're threatening a breakdown. So, you know me, I look at the Stokes and I watch for trends developing. Just keep an eye on it. We're up on the week. I wouldn't sell here if I were long. I wouldn't buy here if I were long. But if I were going to buy 23.73 with resistance right up here at around 29.25 per share. Let's go to the daily chart. Take a look at it. See what it's telling us. Failed breakout today, but we're consolidating. Now, on a daily chart, you're looking at a higher low here. So I would stick with it. If I were going to buy it, any other area besides this pullback point, I'd wait for the breakout to close above 26.73. Right now, with the market the way it is, I would use, again, the 3-day rule. Day 1 is the breakout. Day 2 is the retest. Day 3 is the second retest and or the follow through to the upside. This is a tough market to get long of anything right now, with the exception of commodities. But equities, and this is commodity related, so maybe that'll help it out a bit. EXK, weekly view. All right, so this is Endeavor Silver. You can see no lines, no influences. We're setting up here on a weekly chart a Bollinger Band squeeze. We had the same back here, the same back here. It resulted in a big rally. What's a Bollinger Band squeeze? Bollinger Bands in red, trading inside the Keltner channels, setting up for a probable rally. I love silver. You may get a pullback at some point in time to $3.60 per share. On any continuation breakout after that retest, above 428, I'm a buyer of the shares of Endeavor. Momentum is measured by stochastics, rising, daily view. Yeah, all we're doing here right now is flirting with a resistance level. I like this chart due to the fact that you have a very tight Bollinger Band squeeze here. I'd look at the number of days to cover short positions, and that will help guide you as to whether or not you want to put on a big trade here. If you got a large amount of days to cover, then I would probably get pretty big here because I think that we are going up higher in a probable ruthless breakout. So bullish here on EXK. I like it. The Google, what can you say? I mean, outside reversal bar. If it breaks 187.73, it's coming down here to 171. I'm not a buyer at all. This is a pretty easy one. They may try to rally it off of the support level. My guess is that we fail. Any rally should be faded because momentum is measured by stochastics on a daily time frame. Grinding lower, rallies tend to fade. What happened here? They rallied it and faded. What happened here? Rallied it and faded. Avoid. Rum. Weekly view. Good week. Stochastics grinding higher. This is old news. Let's get rid of this. Let's get rid of this. Let's create a new. We have a breakout on a weekly time frame. I'd be a buyer on a retest of support. Good to go. Set it and forget it. Daily chart. Looks good. It's consolidating. You have a nice Bollinger Band squeeze setting up here. We're trading above the 20-period moving average, which is bullish. You want your moving averages stacked positive. Check that box. So I think you're setting up for a rally here on Rumble, assuming the market holds up. Now, the next three symbols are going to be a measure of as to whether or not the market's going to hold up. If I'm accurate here, this is a volatility product, and it is. And I got to be honest with you, it's extremely bullish. What's bullish about it? You have the Bollinger Bands, very tight. Take a crane. As a matter of fact, let's use the automated trend lines here. Boom, look at this. We've been bumping along the rising lower band of support for weeks now. Nobody's talking about it. Nobody's talking about it. All you're getting right now is retail money drifting this market up higher, and you have the volatility index setting up for a ruthless breakout. Dips are being bought on volatility. So if you're not seeing accumulation of equities by institutions, it looks as though they're buying insurance. You're certainly not seeing them sell their positions. So what it looks like what they're doing is that they're putting on an insurance policy using VIX products. Now, SQQQ is a short product for the Qs. I'm long of it. Am I happy with this price action? No. One trading day left to go. We are at support. We are potentially putting in higher lows. We do have a pivot point. This needs to get adjusted. No adjustment. Get removed. Here's our pivot point. Why is this not moving? Here we go. Okay, 33.22 is the line in the sand. We close the week out above 33.24. Sorry, 33.24. It's game on to the long side for the SQQQ. If that happens, that means the Qs are going the opposite direction. And the inverse, with the last one up here, is the TQQQ. And I got to be honest with you, it looks like it wants to break out. I said this earlier. So we have the VIX that looks like it wants to break out. The Qs look like they want to break out. I think tomorrow is going to be a very, very important day for the markets. How does it respond to A, non-farm payrolls, wages, and the reaction by the market to Amazon's forward-looking guidance, Google's or Alphabet's results as well? It's going to be an interesting Friday, folks. I can guarantee you that. And this is not a cheap market to get surprises in. With that, don't forget, please, TrendSpider, 35% discount minimum below. Use my link on YouTube. Above, the link is on Twitter. And like, subscribe. You know the deal. Hit that notification bell to get notified of when we go live in the future. Everybody have a profitable trading day tomorrow and a great weekend. I'll talk to you soon.